Before we talk about the trades we took today, though, what were those 3 clues again? The first clue was the bull channel with the wedge, right? The bull channel, first clue, with the wedge. A wedge tells me buy the lows, sell the highs, expect the fake out breakouts. That was the first clue. Second clue was outside day or inside day, right, at those lows. Okay, the previous low of day was right there. And of course, the third clue was there was about, there could have been 4 or 5 clues today, really. The third clue was double top and the buy zone from our wedge, which basically told us price would go down to major support and then come back up and retest what? Retest the highs, right? That double top once again. So we knew what the clues were. And for the most part, the dollar said, beware the fake out breakouts. The bull channel said, now think of the bull channel as a directional clue. If somebody put a gun to my head and said, you got to trade right now, long or short, I would say, bull channel, buy. Right? Bull channel. It tells me where my higher percentage trade will be. Easy, right? So I already know my bull channel says, be a buyer. The wedge says, buy at the lows, sell at the highs. Now, yep, buy the lows, the wedge. So the higher percentage trade on the wedge is to buy. What about the second clue? The previous low of day. That previous low of day said, if we break below the previous lows and then come back up above the previous lows, yeah, right? Fail out, right? Fake out, breakout. Sellers fail, buying above the previous low of day. So first clue said, got to be a buyer. Second clue said, there's a really high likelihood we're not going very far below that previous low of day, and we might just find ourselves at the low of that channel, above the previous low of day, and electric going higher. Third clue said, price will probably try to drop and then come right back up. How do we know that? You got it, double top. Right? Double top, guys, and again, we talk about this at all times in our training sessions. It's probably been a year since I've seen a double top or double bottom fail. And we talked about today, guys, a very high percentage structure that basically says price will fall to a specific level, right, such as our buy zone, and then expect price to come right back up and retest, right, that high, that double top again. Now, what do you think happened this morning? Besides the euro falling out of bed and us grabbing 150 ticks on that on the way down. Huge winner trade on the euro later this afternoon. But on crude today, what happened was we ended up breaking new lows. And it was great because, as always, if you would have tried to sell those lows, you would have got 1 winner and 3 or 4 losses. You would have been toast before you ever made your first winning trade today. This is something that took me a long time, guys. It took me about 10 years to learn that if I just skipped the higher risk trades, I might just be in a mental, technical, and trading possibility to actually take the high percentage trades. Okay, 10 years ago when I first began banging my head against these walls, no webinars, right, no gurus out there to share, nobody told me about selling into support. Meanwhile, I'm wondering why by the time I see the real trades I want to take, I've already took my maximum loss that day. I'm already pulling my hair out because I've already given back all my money, all my confidence, all my oxygen. So it was great today because if you recall, we knew that dollar was fake out breakout. We knew we were not going to be likely to get a big push through, and we also hit the double top. That double top up here told us, Joe, don't waste your time selling short. Be ready to capitalize when it comes right back up. And that's exactly what we did. We bought the zone. We bought the re-entry above the channel. We bought the break back above the previous low of day. And what didn't we do? We didn't sell short. Yeah, I probably could have sold short, could have forced a couple trades. But guys, this is all about setting the right example. This is all about being an example for you guys to learn and earn every day with me. A fantastic day today. Morning prep without a hitch. Dollar tried to throw us a curveball, but we were waiting for the curve, right? Save the fastball for next month. Give me the curveball. We've been hitting out of the park all day. So dollar gave us the curveball. We were waiting for it, and we hit out of the park today. 3 for 3 on the fast track today, guys. And again, I can't say enough good things about members this morning. Had a great training this morning, guys, using our auto trader as a discretionary exit. So we began the day around the open, chopping around, slopping around, new lower lows. I'm at support. I'm waiting to buy. Dollar is a wedge. I'm looking to buy the lows. Big picture, bull channel, lows of the wedge, buy. Remember we talked about this, the 3 clues. We go down, again, at the channel lows. 2-step pattern long, 1. Take your profit and run. New lower low. 2-step pattern 2. Take your profit and run. Now, how did I get into those trades? Where's the pattern? Follow me down here. Here's my pattern. Here's a 4 range chart. Now, you know me, I'll use multiple time frames to enter into a trade. Now, we use 13 range patterns a couple times today, 3 times today, earned 50 ticks per contract, guys, on the fast track today. You made more money on the fast track, the supposedly more conservative trades today, than I made in the advanced method, right? Funny how that works out. Keeping it simple really makes you, that can't be true. Keeping it simple, absolutely. So 4 range chart, we come down, 2-step pattern long, right? That gets me 20, what's that? 21 ticks. The next trade, it was a great example. The next trade, though, comes down, 2-step long. That one gets me +5, -5 for nothing and nothing out. What was the difference? Was there a difference between these 2 trades? There was. What was the variable, guys? It was dollar index. Remember that dollar index? The first trade I took, the dollar index was here. By the second trade, the dollar was here, right? First trade, dollar had a big wide range. Second trade, dollar was much more narrow, and that resulted, right, without any doubt in our mind, in that narrower price action on crude.